true first mass market car at a price point most Americans can afford.
The Equinox EV crossover is going to start at around $30,000. And we've also shared that we're working on a vehicle that will even be more affordable than that.
With rivals like Ford and Stellantis scrambling to catch up in the EV race and newcomers like Rivian and Lucid taking the industry by storm, GM's sudden shift has left car enthusiasts and analysts scratching their heads. Could GM's high-stakes strategy redefine the automotive landscape? Or is it a misstep that could drive its loyal customers into the arms of competitors? Buckle up, because this ride through GM's bold new direction is packed with surprises, controversies, and some shocking twists you won't see coming. GM's bold shift toward high-end models. General Motors is doing something no one saw coming. This automotive giant isn't just thriving, it's outsmarting its rivals by honing in on a strategy that's leaving competitors like Ford and Stellantis floundering. And what's GM's secret weapon? It's their aggressive push into high-margin luxury trucks and SUVs. GM has gone all in with the 2024 Suburban, Silverado High Country, and the rugged Z71 models topping the charts as some of the hottest vehicles this year. These models offer power, performance, and just the right amount of luxury for buyers willing to pay a premium. But with their focus locked in on these higher-end vehicles, GM has, without a doubt, stirred up quite a bit of controversy. Industry experts are both impressed and alarmed. An anonymous insider close to GM shared, they're making a huge gamble by sacrificing the lower-priced models that many buyers still want. This is a massive risk for GM, one that could pay off big or backfire completely. And let's face it, GM's strategy could be about to change the entire automotive industry. By focusing on these high-end vehicles, they're making it clear that profit margins come first, even if that means abandoning segments that have traditionally been popular. But here's the twist: if other companies don't follow GM's lead, will GM end up isolated in its pursuit of high-priced cars? Or will the entire industry pivot in this new direction? This pivot isn't without its consequences. By distancing itself from affordable models, GM risks leaving millions of budget-conscious buyers behind, a segment that has historically fueled much of its revenue. While Ford and Stellantis are struggling with bloated inventories and underwhelming sales numbers, GM seems determined to stay focused on the upscale, high-margin models, potentially putting its entire reputation on the line. Think you can still snag an affordable GM car? Think again. Your budget-friendly options are vanishing fast. Affordable GM cars are disappearing fast. If you walk into a GM dealership today, finding a budget-friendly vehicle might feel like hunting for a needle in a haystack. With popular models like the Malibu sedan phased out and even the more affordable SUVs pushing up to $35,000, GM seems to be sending a clear message. Their focus has shifted. Now, if you want something from GM, you'll need a bigger budget. This trend is hard to ignore, especially as even GM's entry-level options, such as the Trailblazer and the Trax, are seeing steep price hikes once standard features and upgrades are added. Think about it. Where can the average buyer, especially those seeking American-made cars, turn to if GM continues on this path? A seasoned market analyst recently revealed GM is rapidly moving away from the affordable car market, and if it doesn't balance its pricing strategy, it risks losing touch with the very customers who built this brand. A shocking statement indeed, considering GM's long-standing legacy as a manufacturer for the American middle class. And here's where the controversy heats up. Sources say GM's executives believe this high-margin strategy will keep them immune to the financial struggles dogging competitors like Ford and Stellantis. While Ford is dealing with excess inventory and falling demand, and Stellantis is trimming its workforce to maintain profits, GM's financial outlook appears incredibly strong. This confidence might seem well-placed, but it's raising a question no one expected. If GM succeeds, will we see the end of affordable American-made sedans and compact cars altogether? What does this mean for future car buyers looking for budget options? Struggling to compete with GM's new game plan, Ford and Stellantis are not having an easy time competing with GM right now. Ford's trucks and SUVs are priced higher than ever, with the popular Expedition models creeping into the $90,000 range, and Stellantis is following suit with their premium trims well above the six-figure mark. This high price point seems to be cutting into their customer base, which is a stark contrast contrast to GM's approach of keeping luxury trims slightly lower priced, thereby luring away buyers who want premium quality without quite such a steep cost. A Ford executive recently commented on the situation, stating, "Ford is fully committed to high-quality vehicles, but we have to balance that with making our cars accessible to our loyal customers." Yet their approach doesn't seem to be winning over as many buyers as they'd hoped. In contrast, GM's pricing strategy, keeping its top-of-the-line trucks and SUVs $10,000 to $20,000 below similar Ford and Stellantis models, has seen their sales soar in these categories. The Chevy Silverado High Country and GMC Sierra Denali, for example, are priced competitively against Ford's F-150 Limited, and the buyers are noticing the difference. One industry insider remarked, "GM has cracked the code on how to dominate the high-end market without isolating price-conscious buyers entirely, which is where Ford and Stellantis seem to be struggling." However, as Stellantis cuts back production of its classic lower-cost Ram trucks to focus on high-end models, it seems both Ford and Stellantis are now being forced into a pricing strategy that's similar to GM's, whether they like it or not. Will Ford and Stellantis continue down this path, or will they pivot back to more affordable options? What lies ahead? GM's recent earnings call confirmed that their high-end focus is paying off. But here's something they didn't mention. They're still losing money on their electric vehicle, EV lineup. While their trucks and SUVs bring in huge profits, GM's EVs have yet to break even. In fact, insiders suggest GM might soon dial back EV production and focus even more heavily on its traditional gasoline-powered trucks and SUVs, at least until the EV market becomes more profitable. Mary Barra, CEO of GM, has alluded to optimizing the EV segment to bring it closer to profitability, but there's a catch. According to industry sources, optimizing may mean fewer EVs on the production line, as GM shifts resources to products with higher demand and profit margins. GM's strategy could be summed up simply: let the trucks and SUVs pay for the slow-burning EV transformation. And if this is the case, we could see other manufacturers adopt a similar approach. But here's the million-dollar question: can GM sustain its dominance without committing fully to the EV revolution that so many manufacturers are banking on? A step forward or a step backward? As the electric vehicle EV race heats up, General Motors' approach to electrification is catching the attention and skepticism of industry insiders. On one hand, GM has publicly committed to an all-electric future, unveiling ambitious EV plans with models like the Silverado EV and the Equinox EV. But behind the scenes, there are rumblings of hesitation. GM's earnings report hinted at a troubling reality. While the company is pouring millions into EV production, they're not seeing the profits. Insiders close to GM have speculated that leadership may be considering cutting back on EV production and focusing resources where it matters most: the high-margin trucks and SUVs that are currently keeping GM's books in the black. Mary Barra, GM's CEO, recently mentioned plans to optimize margins in the EV sector, a statement that has left analysts puzzled. Could this optimization mean fewer EVs rolling off production lines? Many think so. One industry expert noted, GM has realized that while EVs are the future, the present market just isn't profitable enough. They're stuck in a bind. Either push forward with EVs and bleed money, or step back and risk being seen as anti-innovation. And the stakes couldn't be higher, especially as Ford and Stellantis push ahead with their own EV investments. The company is in a classic dilemma. Should it push forward aggressively with EVs despite losing money, or stay the course with their current strategy of high-profit trucks and SUVs? GM's hesitation could be interpreted in different ways, either as a strategic pause to avoid financial risk, or as a sign that the company is less committed to EVs than it claims. Could GM's reluctance in the EV space leave an opening for competitors to take the lead in the electrification race? Stay tuned, because GM's EV choices could impact its future standing for years to come. Ford and Stellantis gear up for the EV battle. While GM wrestles with its EV dilemma, Ford and Stellantis are moving full speed ahead with their electric ambitions. Ford has poured billions into the development of its EV lineup, with the F-150 Lightning leading the charge. Ford's EVs are priced slightly higher than GM's, but they've positioned themselves as the go-to choice for buyers looking for electric trucks that promise both power and luxury. An executive at Ford recently stated, "We're all in on EVs. The market is shifting, and we want to be the first choice for American buyers looking to go electric." Stellantis, meanwhile, has made bold moves in the EV market through its Jeep and Ram brands. With the upcoming Ram EV pickup, Stellantis aims to tackle Ford's F-150 Lightning head-on. But here's the catch. Stellantis has faced issues scaling up its EV production, resulting in fewer options for consumers and longer wait times. As one Stellantis insider admitted, "We're excited about EVs, but we're struggling with production challenges. The demand is there, it's just a matter of getting the cars into customers' hands." Amidst these developments, Ford and Stellantis are eyeing GM closely, and some insiders believe that if GM does decide to pull back from its EV commitment, Ford and Stellantis could aggressively pursue GM's market share in this segment. But the question remains, can they do so while maintaining profitability, or will the rush to produce EVs only add to their financial pressures? Will Ford and Stellantis continue to gain ground as GM ponders its next move, or will they too suffer from the high costs of EV production? GM's approach may offer a stark contrast, and its competitors will need to prove they can succeed where GM seems to hesitate. But can Ford and Stellantis afford to bet big on EVs while risking profitability? The outcome of their decisions might reshape the industry as we know it, and it's a showdown you won't want to miss. Are GM's EVs too costly for mainstream buyers? One of the most talked about points of GM's EV strategy is the price tag. While the new EV models like the Silverado EV and the Equinox EV are high quality, their pricing has stirred up controversy. The Silverado EV, for instance, starts at around $80,000, significantly more than the average American can afford. Many buyers who previously considered GM as their go-to brand for value and reliability are now being priced out of the EV market, forcing them to look elsewhere. Even the more affordable Equinox EV comes in close to $50,000 once options are added, making it a tough sell for those on a tighter budget. The issue of pricing isn't unique to GM, but GM's pricing strategy, particularly on its EV lineup, has come under intense scrutiny. A well-known automotive analyst recently criticized the company, saying, "GM's EVs are priced for the wealthy, not the average buyer. They're ignoring a huge swath of their customer base who can't justify spending $50,000 or more on an electric car. If they don't adjust their pricing, they're going to lose loyal buyers to companies offering more affordable EV options." And the numbers back it up. Tesla, for instance, has been able to maintain a competitive edge by gradually lowering the prices of its EV models, aiming to make them accessible to a broader audience. GM, on the other hand, appears unwilling or unable to follow suit, leading to speculation that their EV lineup is intended more as a brand statement than a serious bid for market share. Could GM's high prices ultimately drive buyers into the arms of rivals like Tesla or even new players in the EV market? It's a risk that could end up costing them dearly, especially as consumers increasingly prioritize affordability over brand loyalty. This leads us to an even bigger question. Is GM even interested in winning the EV race? Or is their strategy more focused on capturing profit from the high-margin trucks and SUVs? With their pricey EV models, GM may find itself at odds with its own customer base, a base that has come to expect affordability from the brand. Will GM adjust its strategy, or are they so focused on short-term profits that they're missing the bigger picture? Tradition versus transformation. As GM juggles its established legacy and its ambitions in the EV market, it's clear the company is facing an identity crisis. On one hand, GM has built a reputation as an American icon, producing affordable vehicles that cater to families and everyday drivers. On the other, the automotive giant is attempting to position itself as a forward-thinking, EV-focused brand, putting out high-priced electric models that appeal to a smaller, wealthier audience. This struggle between tradition and transformation has left many wondering, is GM truly committed to evolving with the industry, or are they just using EVs to capture attention while their real focus remains on high-profit trucks and SUVs? Mary Barra's recent statements provide some clues. She has consistently promoted GM's vision for an all-electric future, yet GM's investment in electric vehicles seems cautious at best. Industry insiders speculate that GM's hesitation may be rooted in the fear of alienating its traditional customer base. One automotive expert noted, GM is playing it safe, dipping its toes into the EV waters without diving in fully. They want to be seen as innovators, but they're hesitant to abandon what has worked for them in the past, the gas-guzzling, profit-heavy vehicles that define the brand. The stakes of this balancing act are high. If GM veers too far from its traditional offerings, it risks losing loyal customers who want affordable, reliable vehicles. Yet, if it doesn't keep pace with the EV transformation, it may fall behind competitors more willing to adapt to changing market demands. The question now is whether GM can continue walking walking this fine line, or if it's about to fall into a self-created gap between consumer expectations and corporate ambition. Is GM falling behind in EV innovation? With Ford and Stellantis both ramping up their EV production, the pressure on GM to accelerate its electric vehicle plans has never been greater. Ford's F-150 Lightning, despite its premium price, has gained traction among consumers as one of the most promising electric trucks on the market. Stellantis, too, is making a bold play with its upcoming electric Ram and Jeep models, despite struggles to match production demands. Meanwhile, GM's EV lineup, which includes models like the Silverado EV and the Cadillac Lyriq, hasn't seen the same kind of fervent consumer interest. Some critics argue that GM's approach lacks the bold innovation needed to capture today's tech-savvy, environmentally conscious buyers. Tesla, for instance, has continued to dominate the EV market with continuous upgrades and a pricing strategy designed to attract a broad consumer base. Ford, aiming to keep up, is now promising expanded EV production facilities and additional investments to drive down prices on future EV models. In contrast, GM's production numbers and reported sales for EVs appear conservative, leaving some to wonder if the company is deliberately holding back to minimize financial risk. In a recent interview, an industry analyst commented, GM's EV strategy is conservative and careful, which could be their undoing. They seem hesitant to go all in, and by the time they're ready to catch up, Ford, Stellantis, and even overseas brands could already have a solid foothold in the American EV market. If GM doesn't step up soon, it risks missing the opportunity to become a true leader in electric vehicles. Will they manage to maintain a strong presence in both the traditional and electric vehicle markets, or are they setting themselves up for an inevitable fall behind competitors who are more willing to take bold steps? Could GM's strategy alienate its own customer base? One of the biggest risks GM faces with its current strategy is the potential to alienate its loyal customer base. For decades, GM has attracted buyers with its mid-range accessible vehicles that have a reputation for durability and reliability. But with the price of its EV lineup edging upwards, it seems that GM's focus on profitability over accessibility is beginning to backfire. Loyal GM customers who are used to paying around $30,000 for a family car are now faced with sticker shock as even entry-level EV models push the $50,000 mark. The backlash is already starting to surface. Recently, a well-known GM dealer expressed concerns, stating, "We're seeing longtime customers turn away from GM because they feel priced out. Many of our customers are everyday families, and they don't want to spend $50,000 on an electric car. They're telling us they feel abandoned by the brand they've trusted for years." It's a strong indication that GM's push toward high-margin EVs might be driving a wedge between the company and its core customer base. This trend could have long-term consequences for GM as alienated customers look to competitors that offer affordable EV options. New players in the EV market, such as Rivian and Lucid, are also eyeing opportunities to capture buyers seeking something different from traditional automakers. And with Ford and Stellantis both signaling a commitment to more budget-friendly EVs, GM might soon find itself squeezed between high-end EV brands like Tesla and the more affordable options its competitors are developing. GM's high-margin strategy. General Motors' pivot towards high-margin trucks and SUVs might be working wonders for their quarterly earnings, but is this a sustainable approach? Industry analysts are divided. On one side, GM's financial success is undeniable. By focusing on high-profit vehicles like the Suburban, Silverado, and Denali, GM is riding a wave of consumer demand for premium trucks and SUVs. However, the strategy isn't without serious risks. As GM continues to raise its prices and focus on higher-end models, many wonder if they're abandoning a huge portion of the market, including first-time buyers and loyal customers who historically valued GM's affordability. One seasoned industry expert warned, GM may be winning the numbers game now, but if they keep alienating their core customers, it's only a matter of time before they feel the consequences. They're gambling on a luxury strategy that might not be what the average buyer wants. As more American families struggle with rising costs, there's speculation that GM's high-margin vehicles could ultimately price them out of relevance. After all, consumer tastes can shift quickly, and what's popular today might not be in demand tomorrow. While the short-term gains are impressive, the real question is whether GM's high-margin strategy can hold up in the long term. If competitors can keep up with both affordability and innovation in the EV space, GM could find itself losing ground. Could GM's focus on high-profit vehicles end up pushing its loyal customers toward brands that are more budget-friendly and future-focused? That's a gamble only time will reveal. Will Ford and newcomers overtake GM? As GM places its bets on high-end trucks and cautious EV growth, rivals like Ford and several EV startups are seizing the moment. Ford's aggressive move with the F-150 Lightning and its expansion of EV production facilities indicates a strategic commitment that GM's careful approach lacks. Ford is not only working on electrifying its most popular models, but also promising more affordable EV options in the near future. This has positioned Ford as a serious contender, not just in the EV market, but as a brand willing to offer choices for every budget. Ford's approach speaks to an audience that feels left behind by GM's current direction. And it's not just the legacy automakers making waves. Newcomers like Rivian and Lucid are actively targeting niches within the EV market. Rivian, for example, has gained a significant following with its rugged, adventure-focused EV trucks and SUVs. While their vehicles aren't cheap, Rivian's branding has captured a unique, tech-forward consumer segment that values performance and environmental consciousness. Meanwhile, Lucid is aiming for the luxury market, positioning itself as a Tesla alternative, but with more premium touches. These new players aren't only disrupting traditional automakers, but also offering choices that GM's lineup currently lacks. With these brands pushing boundaries, GM's traditional approach to high-profit trucks and SUVs may start to look outdated. If Ford successfully brings affordable EVs to the masses, and Rivian and Lucid capture new markets, GM could be left scrambling to catch up. Will GM adapt quickly enough to defend its share of the market, or could its slower EV rollout and luxury focus become its Achilles heel? Is a course correction inevitable? As GM's strategy unfolds, one pressing question remains. Will GM make a course correction if its high-margin, high-end vehicle focus starts to lose steam? For decades, GM has been synonymous with American car culture, with a reputation built on reliable, affordable vehicles that cater to a broad demographic. But as the company doubles down on high-profit models and cautiously ventures into the EV market, it risks losing that core identity. Recent surveys reveal that a significant portion of GM's traditional customers are feeling disconnected from the brand. Many of them, including young buyers who prefer more affordable, eco-friendly options, are actively looking at alternatives. A GM dealer even admitted in an interview, "We're seeing a drop in foot traffic from younger buyers. They want affordable, fuel-efficient or electric options, and they're not finding them in GM's current lineup. If we don't adjust, we're gonna lose an entire generation of customers." The automotive landscape is evolving rapidly, and GM's competitors are not waiting around. If GM continues to focus only on high-profit models and doesn't accelerate its EV production or reduce prices, the company might face a potential exodus of loyal customers. Some industry insiders predict that GM will eventually be forced to reintroduce affordable, eco-friendly options to remain competitive. But will GM recognize the need for change before it's too late, or will it double down on its current path? So there you have it, the bold moves, the high-stakes risks, and the heated rivalry shaping GM's future. Will General Motors' strategy continue to shock and dominate, or is it setting itself up for a showdown it might not be ready for? As the battle lines in the car industry are redrawn, one thing's for sure: this is a story that's far from over. If you found this deep dive into GM's game plan intriguing, don't forget to like, subscribe, and hit that bell icon to stay updated. We'll keep bringing you the latest, most controversial insights on the auto industry's biggest players. Thanks for watching, and stay tuned for more.